Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for the 7th of January, 2020. And we're seeing the market extend the rally, but is at risk of a steeper pullback. We'll start our video tonight with the S&P futures into, well, really trading in a range. We can see that best on the hourly chart on the right, between roughly 32.45, or let's just say 32.50, and 3,200, or let's just say 3,220. The levels are important, but the main thing is that we are experiencing consolidation after a December bullish range expansion. So that's where we'll pick up tonight's video on Tuesday as we go through the rest of this week, the first full trading week of 2020. Now, on the Nasdaq, we fell just a little bit shy of the all-time high, and the market's still trading just shy of 8,900, which isn't that far from 9,000. On the Dow Mini Futures, just similar to the Nasdaq there, we are just shy of a key reference level, that being 29,000, and just under that, or I guess above that, is 30,000 in the Dow. The Russell continues to lag behind the other indices. You wouldn't be able to tell that by the daily chart, although remember the others are at or near their highs. The Russell is not going sideways, it's trading lower. But the bigger perspective comes from the weekly chart of the Russell. So that is again just shy of 1,700, which is shy of its 1,750. That's the bigger picture perspective. Going beyond S&P and the equity markets, let's look at crude oil. 2018 had a slide, really a big slide, big liquidation event in the end of the year. And 2019 has been consolidation. It's been a wide range between 50 per barrel and just shy of 65. That's where crude oil trades at the moment, which is our pivot at 63.50. So that is a sell opportunity or a sell swing or a vertical or in-out spread type of bear strategy, or maybe even intraday strategy might work best against 63.50 and ultimately 64. Gold, on the other hand, has completed and exceeded its bull flag target, and at least the prior high. The target goes a little bit higher than that, but let's watch 1575, 1560, and 65 on gold. If we see an extension to the upside, just like the other indices, we are not that far from 1600. On the daily chart, this gives a little bit better perspective of a bull flag, and the support bounce by off of 1450, which gave way to a breakout. The most recent bull flag opportunity or breakout opportunity took place above 1485 and then 1500. And that led to a mega rally to these new swing highs. Not new all-time highs, of course, although the weekly chart might look like that. On the bigger perspective, taking us back, it does take us farther in the gold market, but it takes us back to where we were in roughly 2013. So gold could have additional room to run to the upside, and if additional uncertainty in the global markets or other news events do take hold, you may see investors and assets chase the safety and the inflation protection, really, of the gold market. So right now we are into this 1600 level, bull flag, strong volume. And if the market keeps going higher, note where this pivot was, prior support from 11, 12, and 13. It's not that far away from a rally much higher. So in silver, we can compare those two markets, where gold is a little bit more active and probably more traded, at least more discussed, and silver is not. So that is a similar type of support bounce in silver, similar type of flag, and its key pivot is not the prior high. It is roughly 1850. If you do not trade futures, these would be similar in SLV, of course, optionable and option strategy, and GLD would be the similar market or product to trade these opportunities. Bonds, on the other hand, just exemplified by TLT right here, did have a short-term swing buy against 135, and that has ended into the short-term target of the prior upper trend line, just shy of 140 per share. Similarly, the 10-year Treasury note, these pivots are same levels, same logic. For ZN, it's roughly 128. The upper trend line, will zoom in here, is roughly 129 or just a little bit above that level. In the ZB, we see similar logic and similar contraction. One other thought for the video, or the title for the video, could have been triangles and breakouts. So bonds, just like gold was coiled up not that long ago, if things start to go south or things start to ramp up in the Middle East, you might see the gold or bonds take a similar pathway to gold. And that would result most likely in the S&P and other indices falling lower. You'll see the video is recorded after the market hours, just briefly after the market closed. And we're seeing some downside action in equity futures. We'll finish up with that looking at look at the overnight, because that way we'll be able to see what just happened in the futures market. So we are in a contracted environment. This is taking into account overnight sessions, and all of these charts are 1 hour or the hourly chart. Equity markets, again, uptrend into consolidation, pivot points roughly 3250 and 3220. We're seeing the market test down to the red line is the point of control. On the other hand, gold keeps getting stronger. Uptrend, pullbacks, retracements. Its pivot once again is 1580, 1585, and ultimately 1600. And gold, or crude at this point, is uptrending, but we had the Iran news, and stocks went down on that news, but crude went up. That's going to send those markets a little bit in different directions. So don't count on equities and crude moving in lockstep when those type of oil-specific events trigger or hit the headlines. And again, like gold, bonds are into upper resistance. All these things in consideration with news events, any other economic reports that come out over this week, and we're always keeping a watch on, at this point now, the Middle East, knowing that at any point in time, a headline can send the markets up or down. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for January 7th, 2020.